Good afternoon, this is Pat Walker, Mission Winners, doing a video overcap review of the ETFs. You can say, why do we do this? Well, folks, let's be blunt. We've got a limited amount of money and we've got a limited amount of time. We have to use both wisely, correct? Being organized helps us. An organization in this respect. Leading groups produce leading stocks produce leading groups, right? And I'm not saying that to be cute, it's just a fact. Looking at the ETFs help us focus on what sectors, what groups are doing well and what ones are doing poorly. We focus on the ones that are doing well and we notice they're clear of stocks that are in lagging ETFs. Here's a classic case. Cloud computing. Right away this says, I better stay away from cloud computing stocks. I mean, look at this drop here. By the way, the purple line's the 200-day, the green line's the 50-day, the blue line's the 21 EMA, and the yellow line is the 8 EMA. What's it doing? It's falling, and it has been falling. Leave it alone. And if you saw this and said, way back here in mid-November, I think I'm staying, or late November, I'm staying away from cloud computing stocks, you save yourself a ton of heartache. There you go. It's that simple. Here's the next one. Autonomous driving vehicles, all right? Electric vehicles. Had a great run. Tesla, NIO, Rivian were a big part of this, XPEV, and now since then it's really lagging. What does this tell you? Be careful with electric vehicles. That's simple. That helps us. Dow Jones Internet, what does this say? You better be careful with a lot of the internet stocks. IBD 50. This ETF focuses on the IBD 50 stocks. It's been underperforming, and that's not a criticism of IBD 50, no, or of IBD. It's just pointing out that these great growth stocks, and they do pick great growth stocks in the IBD 50, okay, they're underperforming. Be careful with them. Gold miners on the other hand, is moving up nice. Gold, moving up nice. Own it. Let's do something here, make sure we're up to speed. There we go. Look at that. It's nice. Biotechnology, it's below the 200-day. It went below the 200-day back in early November. And if you said, I ain't messing with stuff below the 200-day, you saved yourself a world of pain. You know what else it did? It allowed you to focus on areas that were doing better. Isn't that smart? We have a limited amount of money and a limited amount of time. Let's use our assets in a way, and time is an asset. Let's use it wisely. And for a long time, for months, this has been saying, yeah, I wouldn't be messing with me. Online retail lagging. Leave it alone. American technology, North American technology, fell below the 50-day on heavy volume on November 30th. Look at that. And it hasn't gone back above the 50-day since. There's a trigger for you. There you go. We can use this. Medicine, lagging, was really strong for a long time. Now it's lagging. IJH mid-cap, lagging, underperforming. Home builders were really strong for a while, but now look at this. Look at when it lost the 50-day. Then it rallies back up, gaps up, and reverses back down below. And that's all she wrote. Simple rules, simple techniques, nothing fancy. I show this, by the way, to help you see the techniques, understand them, but more importantly, apply them. Apply them to help you make better decision making. Growth, S&P growth, 500 growth, lagging below the 200-day. Be careful. Airline stocks, still underperforming below the 200-day. Needs to get over the 200-day. Regional banking had a good run, and now it's getting a little choppy, but it's still above the 50-day. But there's some distribution in there. Biotechnology, another biotech ETF. Literally in 1 second, you look at this. I mean, folks, way back in May of last year, saying, we're not so good anymore. If you just heeded this, you missed all this carnage. I mean, this thing went from 80 all the way down to 16. And you know what's really sad? There are people that bought it up here, and they still own it. Rules, tactics, discipline. And it's not rocket science. That's the best part. Mid-cap still underperforming below the 200-day. Oil services has been strong and has been strong. See this way back here? I just showed you a bunch of charts that look awful and looked awful back in January. This looks strong back in January. And yes, we've been heavy in oil, energy, Online retailing, lagging, below the moving average. You know, I talk about the 200-day. There you go. Back in July of last year. Leave it alone. Stay away from it. Eventually it'll turn though. Okay? Infrastructure was really doing well and then it cracked down. There's nothing to do with it at this point in time. I'll make that bigger so it's easier for you to say. Cloud computing, nothing. Was leading and then started to lag back in November. And you just leave it alone. That's all. It's simple. Again, it helps us, it keeps us safe, but it also can guide us into areas where there's opportunity. Steel started to lift, but fell back below the 200-day, nothing yet. Semiconductors was a great run, and now it's lagging. Solar was a great run, and now it's lagging, and has been lagging. Treasuries have dropped, okay, with rates. There we go. TNA, small cap, another small cap, nothing. Oh, oil. Oh, I wonder if we're in any oil stocks. Yeah, we're heavy in oil stocks, and we have been heavy in oil stocks. And it's not because we're wizards or anything like that. No, you know what it is? Just looking at the darn charts. It'll tell you where to go. You don't have to forecast. I mean, compare this, doing this, to this, aerospace and defense, doing that. Biotech, another biotech dead. Home builders was really strong, and now it's lagging. Look at this. When it lost the 50-day, then rallied back up, and then it started to fall again. If you missed this first sell signal, you had a gift and got another one. And if you missed that one, now you've got a problem. There we go. Continue onwards. Materials. You need materials to build things. It was strong and now it's lagging. Energy. Look at this. See how you connect the dots? I just went through a couple of different energy. I went through all these ETFs, and what's been the strongest theme? You know it. Oil, energy related. Look at this. And again, that's why we're involved in energy. Financials, chopping around, nothing really special. Industrials, lost leadership, nothing there. Technology, look at just by looking at this, back at the end of the year and the first of this year, you say, yeah, man, technology is kind of getting rough. Helps guide us, keep us away from that area. Consumer staples, hanging in, not too bad, all right? Things that people need. Healthcare, serious selling here. Lost leadership. Be careful with that. Consumer discretionary. Lagging. Okay? Think about this. I want to show you this again. This is important. Consumer staples. These are things that the consumers have to have. All right? Consumer discretionary. These are things that consumers don't have to have. It's underperforming. Consumers pulled back is spending in this area. That's knowledge that can help you. Say, well, if I'm going to buy any consumer stocks, I'm going to buy soap and stuff like that, things people need, toothpaste. I'm not going to buy the discretionary stuff that they don't have to have. Continue onwards. My mistake, excuse me. Metals and mining, doing well. Are we involved in metals and mining? Yeah, sure. Retail. Are we involved in retail? We haven't been involved in retail for a while. Look at this. There's no reason to. And software. Software was strong for a while. Look at that. Look at those moves. And then it starts lagging, and there's nothing to do with it. So we've basically avoided it. And it's a case, this is the beautiful part. It's not forecasting. It's simply looking at what is and applying that knowledge in our selection process of stocks. Things that could be possibly good, but also areas to avoid. And that really helps us. So now let's look at the MAXLIST stocks. Here we go. Apple was great right there. Couple of buys right there. Yes, we did buy it. Okay, I'll shrink this down so you can see what I'm talking about. Right there. Buy. Buy. Look at the volume pickup. Look at the trend. Yes, and what do we do? Sells into strength, help us. By the way, we don't sell at the top, okay? We don't know the top until after the top is formed. We don't know. We just sell some, and when it starts to fall, we sell the rest and take the money and run. Here's the next one for you. Amazon. This was good right here. A couple of buys and sells into strength and didn't argue with it and made money. But look at it now. Now it's loose and choppy. This was a good day, but no follow through. It's chopping around. It's below the 200-day and it's below the 50-day. It needs to start showing some strength. For now, be careful. Alibaba is dead. There's nothing to do with it. BIDU showing a little bit of strength, but it's just up to the 200-day and falls again. Leave it alone. Meta, yeah, that's not so good, is it? In fact, that's downright ugly. And you know what's the important point? I will share this, team. Strive to stay away from stocks below the 200-day and the falling 50-day. If you say that and practice it, life will be better for you. And you can say, well, I might miss the bottom on something. Yes, but you'll also stack the deck in your favor by focusing on strengths. I mean, folks, right here, this isn't strength. You're going to say, oh, Pat, yeah, look, it gapped up and it closed below where it opened on heavy volume. It was met with selling pressure. Be careful with that, okay? Nothing to do with it at this point in time. Google earnings, okay? And this is what I told the VIPs. Please be careful, and I'll share this with all of you. Please be very careful chasing big gap ups. If you buy, start smaller. I'm sharing this with everybody. I've been doing this since 1986. So yeah, we've got a few rules under our belt, some experience. There's nothing to do with it now. So you see all this decline? We've never owned it. Nope, gone. Goldman Sachs, below the 200-day. I've already mentioned that a couple of times. And below the falling 50-day. Just leave it alone. This is what I used to say at the IBD meetup. And maybe it sounds corny. The air is better above a rising 50-day and 200-day moving average lines. The air is better. There you go. MasterCard, lifted on heavy volume, and now it's just chopping around. Maybe it will start showing some life. But what else does it need? The M and mission winners, the market, okay? Microsoft. It was a great run for us back here, and I'm going to show you this. Right there. Look at that lift. That was beautiful. Sells into strength. Double top here. Okay, we didn't buy this because it didn't trigger, and it just drops. Look at the volume. Then it's down to the 200-day. This is what's called wide and loose, okay? When you get action like this, be careful. And now it's back below the 200-day. What does that tell you? Leave me alone. When you start saying to yourself, I ain't messing with stocks below the 200-day, you'll do much better. When you start saying to yourself, I'm really focusing stocks above the rising 200-day and above a rising 50-day, your profitability will improve. Not an opinion, fact. Netflix. Oh, look at that. I'll be darned. This one lost the 200-day right there. Remember we just talked about the 200-day? Look what this has done since then. I'll drag it over here. Yeah, you know what? You know what I call that? I call that a bad movie. Okay, I'm sorry, a little bit of dad humor. If my kids were here, they'd just shake their head. Here we go. Nvidia. Nvidia had earnings. Drops right down. It's below the falling 50-day. It needs to get back above there. That will help. Until then, just be careful and wait. That's simple. Tesla. This had an electrifying move right here. Man, I'm in prime shape, aren't I? And now it's just chopping around. There's nothing to do with it. Okay? Wait. Maybe it'll form a base and then lift through here, take out these tops, and then take out the 50-day. Maybe. You know what's the best part? It'll tell us what to do. All we have to do is watch. That's simple. Twitter, those tweets aren't helping for anybody, are they? Look at that. Remember I said, how many times have I said about the 200-day? Look at this. Falls below the 200-day right here on a volume pickup. I'll show you something here. Watch this. Fell below before, rallies up, loses the 200-day here on a pickup in volume. Drops down, closes in the top third of its range, but it's below the 200-day. Gaps up, runs up to the 200-day and 50-day right there, and drops down. That's a powerful lesson for you. Watch this. Look at that. That's the 200 days, the purple. The green line is the 50-day. Rallies right up and reverses down on a pickup in volume. Oh, gosh, that's not so good, is it? Yeah, I guess that's going to be a problem. You know what they say? It's like, what was the movie, Tommy Boy? Yeah, that's going to leave a mark. There you go, The tweets just didn't help there, did they? Okay, let's continue on. There it is right there. Okay, and then finally we go to Visa. Visa starts to lift. It's above the 200-day, needs to start showing some life. Nothing really special there. Gives us some guidance on what's going on. And you could look at this and say, well, there's nothing going on. Well, I'll tell you, there's nothing going on in this area, but there are other groups that are doing well. Energy is doing well.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.